All right, in this episode of 51 Vets, we sit down with Mark Jones, partner at River Associates. And what we're going to be talking about is his career leading up to River Associates, what River Associates is, and like getting into the nitty gritty of what he does day to day, the structure of the firm, what people do inside of the private equity firm at the operating companies, the portfolio companies that they have invested in. So Mark, thanks a lot for doing this. And would you mind kind of giving a high level intro, and then we can kind of dive into some questions, and it'd be great, Mike, if you can kind of take it from there.
Sure. So I guess the nickel overview on River Associates is we've been investing in lower middle market companies. Generally speaking, that means, 20-ish million in revenue to maybe 100 million-ish in revenue. We think about it on a more importantly on an EBITDA size, so kind of pre-tax, pre-interest, pre-depreciation of 3 to 12-ish million is typically where our platform companies are. We were founded in 1989, so we've been around a long time, which is pretty unusual. We're investing Fund 7, which is a $285 million committed capital fund. Our underlying investors are institutions, family offices, wealthy individuals, probably 60-ish% institutions in Fund 7. And they really entrust us to go find opportunities, find these companies and help them grow and get bigger and better. We are what's affectionately known as an industry generalist. So we don't really focus on any one type of vertical, say a healthcare or consumer products or what have you. That said, probably 70% of what we've done historically has been into industrial-ish companies, typically manufacturing, B2B product type companies. And our role within these companies, our letterhead says investments with management. So we are not trying to run these companies day to day. We are not buying companies. We are investing in people. So oftentimes we have a core of a management team at these companies, and we will sometimes augment the team, but we are not parachuting into these companies to run them day to day. There are a lot of firms that have an operating partner model where they really are assigning somebody. They're spending a lot of time physically at the facility. That is not our model. We bill ourselves as active directors, and I think that's a pretty apt description. Oftentimes, we are applying a buy and bill thesis with these companies, so we'll find a platform in a given space and then go seek potential strategic add-ons. And we've done add-ons in probably 2/3, 70% of the companies that we have invested in. Our next investment will actually be our 100th investment historically. So, been a lot of different companies, and we will continue to stay focused on lower middle market companies. We're going to resist the temptation of raising a much bigger fund and going up market. We like the space where we are. We like the types of companies in which we invest, and we'll keep forging ahead.
That's awesome. I guess one of my quick questions is, how many people are in the firm? Like how many analysts, associates, or what is the actual structure of the firm? And it'd be interesting to kind of hear, maybe starting from the ground up,
Yep.
What does the analyst do? What does the associate do? How did they get to where they're at?
Yep.
What does your day-to-day look like?
So we've got 5 partners. We've got 2 VPs, and we've got 2 associates. So no actual analyst. Typically, the most common way into private equity is through an investment bank analyst program. And so they are analysts then, they join us typically as associates. The roles, most everybody, with the exception of me, is pretty involved with the different portfolio companies. So I'm kind of the front end of the machine. So I am working to develop relationships and develop deal flow from all kinds of sources, primarily boutique investment banks, some business brokers, some accountants and attorneys, people like that know what we like and can bring us into a given opportunity. I typically attend most of the initial management meetings because I like to sell us, and I enjoy meeting with the companies and meeting the different people in the companies. But once we sign a company up to letter of intent, I'm going to extricate myself from the process so I can help find the next opportunity. I won't sit on the boards of the companies just because it's a lot of time. It takes a lot of time, and it takes time away from what I need to be doing, which is finding the next opportunity. My colleagues are very involved, and we'll typically staff a given portfolio company with a couple of partners, a VP, and an associate. And they really work with the team. They get to know them well. They execute on a strategic plan. We will oftentimes contract with a third-party buy-side firm to help identify potential strategic acquisitions. So it is helping the management team take a 20, 30, $40 million business and make it a 60, 70, 90, $100 million business. And that happens. We model our investments like most private equity groups on a 5-year hold. We've sold in less, we've sold in more. It generally depends on if the investment thesis has been realized and how much equity value has been created, and just general M&A market conditions. We do tell our managers, and we're very honest about this, we will never sell a company without them being on board. That's not our game. We realize, and we've done this all through our tenure, those people are going to be our best or our worst references one day. So we're very protective of those relationships. And listen, it has served us extremely well. And it's interesting. I hear some horror stories on the trail about, the conflict between private equity and management teams, and ours has been the polar opposite of that. And sometimes we actually have to. It's interesting because there's certainly some negative headlines out there about private equity, and every group is not created the same. And so I think what most investment bankers will do in a process, they will allow companies to meet with, a wide range of groups and have exposure to different styles. And we have found our style is a great fit with companies that are seeking their first time institutional capital, because it's a low key, it's a partnership style. Listen, we want to win, but it's not a hard charging, it's not an in your face, it's not the operating partner model. And I think they really appreciate that.
Have you always been in the origination side on the business development, or did you start off in the transaction piece and then see a need that was critical to just focus on the actual deal sourcing?
That's a great question, Mike. And that's exactly how I started. I started kind of wearing a bunch of hats. I call it affectionately the old model of private equity, which everybody kind of does a little of everything. They're sourcing deals, they're getting involved in deals, they're working on the financing, they're closing them, they're staying involved. And that's fine, but I think most of, I don't know what the numbers are, the percentage are, I think most private equity firms have migrated away from that to be a little more siloed. And I have to imagine the majority of private equity groups now have a dedicated business development function. It helped me, though, to start in that role because I understand the transactions. I understand all facets of closing the business, and I also speak for the firm, so I know what we're going to like. Investment bankers, intermediaries, they trust me to tell them if we're going to chase something hard or not. And listen, the second best answer is a quick no, right? And so I think that has served me extremely well. There's a lot of different models out there about business development. I will not only develop the relationship, have in-person meetings with these people. I will review confidential information memorandums, the SIMs. I will tell the investment banker if it's a good fit or if it's not a good fit. I know the financing side of it. So that's one model. And I do the management meetings, as I said. Another model might be somebody who is truly just on the road, playing golf, going to dinners. They don't actually review any of these SIMs, which it's just a different model. Thus, ours works for us, and I think it's a good model for developing credibility with the investment banking marketplace.
Mark, would you mind kind of giving an overview from beginning to end about the life cycle of a deal? So for example, stage one or step one is you get a teaser from an investment bank. And then the
Yep.
last step is you sold the business. So can we fill in the gaps in between there? I realize this could be an entire semester of college work,
That's right.
but let's do private equity 101 from a very high level, and keep it in mind that some people in the audience who are watching or listening to this later on might not know what like a sim is or a teaser is. It'd be great to kind of have that overview.
Exactly. The most common way of getting a teaser these days is somebody will email me something. Some bankers are a little more old school and like to call and tell me about it, which is fine. Either way is good. But a teaser is it's typically 1 or 2 pages. It's going to give you the highlights of the business, the size of the business, the industry, any key considerations. It's a screen. It's a filter to let us know if it generally matches what we do. That said, it does not have all the details, and sometimes a SIM, a confidential information memorandum, will have some pretty major details that were not in the teaser that you wish you'd known, i.e., a 60% customer concentration, or something that's just a cliff risk, as we call it. So we'll take the SIM if we think we want to pursue it, and typically have, I don't know, 3 weeks, 3 or 4 weeks to come back to the banker with an indication of interest. Now, there's several things that happen in between that period. What we typically do, if it's something that we think it's worth spending time on, we'll come up with an initial list of questions and data requests. We'll send that to the banker. We'll set up a call with the banker. We'll ask all these initial questions. We also keep a third party on retainer that helps us on a confidential basis to get smart on given industries. There's certain industries we've been in, we know them pretty well, but this firm is a wonderful resource, just a great resource to find us on a niche industry that we don't know much about. They'll go out and find people who have actually operated a high level in this world and can tell you. It's amazing what we learn sometimes on these calls that can sway us either positive or negative on the investment opportunity. So, that 3 or 4 week period, that's what we're doing. We're getting smart. We'll run it by our lenders to get some leverage reads to say, hey, what's the debt profile here? How much would you lend on a business like this, assuming all the boxes are checked? So after that 3 or 4 weeks, if we decide to submit an indication of interest, an IOI, we'll do that. And our goal at that point, if we really like the company, is to make the following step, which is generally speaking a management meeting. 2020 has thrown a little bit of a wrench in that. So the majority of management meetings are virtual right now. That's probably going to continue, and I'm not going to be surprised to see some aspect of virtual meetings stick around post-COVID. I think people have gotten used to it. From our side, people realize, hey, this is a lot cheaper than putting 4 or 5 people on an airplane, the hotel, the travel, the time. And then from a banker and company side, they're not traipsing 8 or 10 groups through their plant and really just broadcasting to the employees what's going on when all these suits are walking through. So I think there's going to be some element of that. We really do prefer to be in front of management teams because we like to articulate our track record and how we can show that we're really smart on the business. And so I think we can sell ourselves better. But again, that's going to stick around. So typically from there, they're going to narrow the field. And
Mark, I'm sorry, if you could rewind just a little bit. When you get the teaser, you sign the NDA, you get the SIM, and you guys, once you get the SIM, what happens internally? Do you have your Monday morning investment committee meeting? You ask questions on whoever's looked at the deal, and like what actually goes into the IOI between the SIM, yes, we're interested, and the IOI stage? Can you kind of walk us through those steps?
Yeah, generally speaking, 1 or 2 of us are going to screen it. And if we agree that it's something worth spending time on, we're going to develop a deal team. We're going to develop 3 or 4 people that are going to be the sponsors, the chair people on this deal. And they're the ones who are going to come up with that initial list of questions. And they're going to take the lead ultimately to closing and running that company for, managing that company for 5 years if we chase it. So everybody in the firm, I mean, you can't have everybody on it. I will say though that as a small firm, we're all pretty well versed on all the portfolio companies. I mean, there's 9 on the deal side, if you will, and we have 9 platform companies right now about to close on our 10th. So again, and that model probably won't apply at some of the shops that are very, very active and may have 50 or 75 portfolio companies. So a very different model. So if we ultimately, you're doing all kinds of things going through this process. The management meeting is, that's probably the most critical piece, honestly. Oftentimes, not always, but oftentimes, the banker, the investment banker, the company, they're receiving a lot of offers that look extremely similar. I mean, because we're all getting our leverage reads. We're factoring in the historical growth profile into our models. And in fact, so I mentioned we were going to be closing a new platform in January. And the banker was real honest. We got chosen. It kind of came down to 3 potential buyers, and we were fortunate that they chose us. The banker was very transparent, and he said, interestingly, 3 different groups, all 3 of us really, really liked it. All 3 groups were within $250,000 of each other in terms of enterprise value. I mean, so truly less than 1% delta there. And so it was a great example of no outlier bids. And the company chose truly based on chemistry and fit and comfort. We gave them, with our letter of intent package, we gave them 4 different portfolio company references, CEOs that we are currently partnering with or have partnered with historically, and we know that they called at least 3 of those references. So that was a big consideration. And so this example was one where the sellers were reinvesting a significant amount into the new co. So chemistry was extremely important. They just weren't walking away. They wanted somebody that would be a good, ethical, transparent partner. They wanted somebody they felt comfortable with. They wanted somebody that they thought would take good care of their employees. So there's a big element of salesmanship going on all through this process. There's a big element of convincing the other side that, especially since the prices were generally all equal, of making sure that they're comfortable with the certainty of close. That we weren't going to do something. We had all the boxes checked. We had our financing. We had, we were well on the way on documentation. We weren't going to throw out any crazy terms in a purchase agreement. We would have reps and warranty insurance. We would have no crazy due diligence requirements. A big thing that people get concerned about a process are third-party reports. And so we lay out all the different third-party diligence providers that we use, whether it be benefits or insurance or background checks or IT diligence. So there's a lot of things that need to be done. One of the biggest ones is a quality of earnings report. Most every private equity group will bring in an outside, typically an accounting firm. We use kind of a consulting firm that they're former accountants, and do these Q of E reports, as they're called. And sometimes bankers will get nervous if you bring in a Q of E provider who has a reputation for just really nitpicking and things like that. We use a small boutique firm where you get kind of big 4 attention, but you get the real important stuff. And they're business people. They know how to get to closing. They're really trying to help us identify material issues, not trying to nit at them. Another big issue is who you're using for a law firm. I mean, there are definitely law firms out there that if a banker sees XYZ law firm coming, they're like, oh no, this could be a nightmare. They're really tough. And that's not our style. We use a very business friendly law firm. And we actually hired our former legal counsel. Now he's not in-house counsel, but he does a lot of things that we don't have to farm outside. So it's cost effective and he can kind of steer the ship, and he acts as a liaison between the company's lawyers and our lawyers. So there's a lot of moving pieces in all of that. For example, this company that we just signed up, four of my colleagues are out in a very snow-covered Oklahoma right now, and they're working on that. They're in person. There's a massive diligence list, as you can imagine. They're going through that. They're having meetings with the employees. So there's all these steps that take you up to closing. Post-closing, generally speaking, we leave the company alone for a little bit. They've dedicated at least 6 months to a sell side process. It's exhaustive. So we kind of let them get back to running the business for a little while. Not too long after that, we'll have a kickoff strategy meeting. We'll talk about what we need to do in the first 6 months. We'll talk about, it'll be a brainstorming whiteboard session. What are the most actionable paths to growth?
Sorry, Mark, if I could pause you. So to purchasing the company all the way back to getting a teaser, about how long is that process?
Depends on how quickly they move, but it can be anywhere from 3 to 6 months.
Okay.
Yeah.
And back on the purchase agreement, you said no crazy terms. What would be an example of crazy terms?
Oh, if people are trying to play games with the working capital adjustment and working capital, you're kind of buying a company at an average level of working capital, its receivables, its inventories, its payables. If somebody's trying to utilize that as a purchase price mechanism and be unfair and basically buy the company for less, that's out of market. If you're not treating the management investors the same, if you have some kind of a tricky, funky multi-share agreement where their shares aren't as valuable as our shares, that's going to be looked at not well. And we don't ever do that. I mean, we're all on the same page. We sit at the same table, and that makes a big difference.
Mark, I've got a quick question for you. Thanks for your time and all this great knowledge you're providing to everybody. You spoke earlier, you alluded to kind of 1 to 2 guys on the essential deal team. And I know it's different at every firm, but at River Associates, do you see typically on your average deal, those 1 to 2 guys that are on that team or girls follow through all the way through to LOI, or is it more that handoff to the transaction side of the house? I lost you.
Yeah, you're on mute.
I don't know what happened there. So we'll actually have 3 or 4 on the deal team, and they'll take the lead on it really from pre indication of interest, and they will be the team that will be involved in that for 5+ years.
Oh well, so okay, that's just past acquisition and actually running the company or seeing it big picture. Nice. Okay.
Yep. Oh, and again, we're a small firm, so very often, I think I've met every CEO in the in the portfolios, which is nice because again, we're a small firm, and we'll have quarterly board meetings, but we'll typically have maybe one a year in Chattanooga, for example. And just recently we had a few of the CEOs come play golf with us at a really nice golf course here, and so they really appreciate that. It gives them a chance to meet other members of the firm. So yeah, we'll at that kind of kickoff meeting, if you will, we're starting to develop a strategy, and we really and don't get me wrong, that's not the first time we're thinking about strategy. Obviously, we've done a lot of that thinking before. if there's going to be a strategic acquisition search, we're going to talk about the various directions you can go, whether it be buy a competitor, add a product line. What are you seeking in an acquisition? Does it have to be able to be tucked into the operations at the plant level? Can it be somewhere else in the country? Maybe that's beneficial, maybe it's not. Depends on the business. So we're going to develop a strategic acquisition plan. And most often, we're going to hire a third party buy-side investment bank to go out and canvas the landscape. And these are kind of unique banks out there. They don't do sell sides typically. Some of them do, but they're scouring the landscape, and they are finding, in a perfect world, businesses that your management team might not even known existed. But they would.
Mark, I am very familiar with this as an analyst and associate. However, I was calling Singapore and Korea and Japan from New York because we were doing buy-side searches on behalf of US-based corporates into Asia. So I remember one project, I was in the office at like 1 and 2 and 3 a.m. calling Singapore education companies. Like,
oh my gosh.
Oh yeah, that was fun.
That sounds rough. Yeah, we're typically not chasing them outside the US and Canada. So our job is a little easier. And listen, they're not always successful. Ultimately the most common answer you get from a potential seller is, I'm not for sale. Yeah. And the second most common is, well, yeah, I'm for sale at a crazy multiple.
Right price.
But there are some, it's interesting, managers who are in a given industry, they oftentimes think they know everybody in the industry. It's just not true. I mean, it's just so many different paths you can go down. And you might have 10% of your business dedicated to one kind of certain product line. And we've had that scenario before where we've gone out and we've augmented that product line. So by the time we exit the company, that's half of your business. And so there's it's a really wide universe. And a lot of it does come down to timing when you approach these companies and what's going on in their life. So on an ongoing basis, we're going to have quarterly board meetings with the companies. We're going to talk to them though, and we're going to talk to the companies every week or so. I mean, and if there's something going on, if there's a key hire going on, if there's a plant expansion, if there's an acquisition going on, we're talking to them, every other day. So we develop a cadence with each company, and in terms of how we interact, we get a weekly flash report from all of our companies, and it's tailored. We don't give them something that's a cookie cutter. It's tailored to each business, and basically it's the things that the CEO, the CFO, operations folks, they're looking at anyway. It's key metrics of the business. It's backlog. It's shipping. It's on-time shipping. It's things to let us know if there's any trends that we should be aware of, so there's no surprises. And it's a very helpful thing. We're going to handle the monthly financials. We're going to coordinate the communication of the monthly financials to our lenders. So we have a general stock kind of reporting and letter that we send to all of our lenders. I mean, those are definitely the key elements of what we're doing with these companies. With the ultimate growth, the ultimate goal is to grow the business. And when we're modeling a company, I don't know how other groups do it, but we're trying to come up with a realistic base case scenario. And what we're looking for to get interested in is essentially a double, if you will. Our investors judge us on two key metrics. That is a multiple of capital invested. So if you invest $1 and you give back $2, that's a double. As well as an internal rate of return, so your IRR. I think most investors tend to lean more, put more importance on the multiple of capital, because the IRR, as you probably know, Jordan, can be a little tricked up, and it's highly influenced by the clock. And if you have a big hit and sell it after a year, you have a crazy IRR. But as one LP told me once, you can't spend IRR. So it's a pretty valid point. Now, when I say and again, this is a little inside baseball, so stop me if you want. But when I say we want to double in a conservative, in a base case, we're not assuming any positive multiple arbitrage. So say we buy a company for 8 times, we're just going to assume we're going to sell it for 8 times. Over our history, we have had multiple arbitrage in 90% of our exits. So again, that keeps it fairly conservative. And we're in a base case, we're typically not assuming we're going to have any heroics with add-on acquisitions. But again, we've done add-on acquisitions in 70% of the platforms.
Mark,
So
what is your general strategy? For example, some private equity firms say, we're going to take you from regional to national. We're going to take you from national to international. We're going to take you from distress to you're going to live to fight another day. What is your general MO?
We're not going to be, so typically we're not the distressed guys. So we're not buying a troubled asset. And we're typically not going to be aggressive on international acquisitions. So it's really more taking a, $40 million widget company and figuring out the levers that are ultimately going to make that business attractive in 5 or so years to a broader universe of buyers. And that's going to be A, growing the EBITDA. That's going to be B, doing things that are going to continue to enhance the equity value, i.e. growth. So emphasizing if you can go through acquisition and find other growth segments that you can add to the business, that's going to enhance your multiple down the road. So you're trying to find those pieces out there that you're thinking ahead and saying, what's the buyer universe going to look like, and what are they going to think of our business? So every time we're looking at an acquisition, we think, well, what's that going to do to our equity? And oftentimes, we'll bring in investment banks early in the process to get their perspective. Say, hey, we're looking at here are the 3 add-on acquisitions we're looking at. If you were selling the company in 5 years,
how would you position this? What does strategics look like? Is it more financial? Well, so if we could maybe shift over a little bit more of the discussion, maybe like 90 degrees to the right, so and focus on like Mike and Zach, and giving your candid feedback about where they are at and where the path that they are going down. But maybe Zach, can you kind of kick off and just kind of give background of where your head's at and kind of the path that you want to take? And then Mark, it'd be great to hear your feedback on, what it takes to succeed, if it's a reasonable path, and if it is, what it takes to go down that.
Yeah, I'd love to get your feedback, Mark. So 1,000-foot view, active duty military in the SEAL teams, transition out in a year. I'm currently starting my second year at UCLA MBA at Anderson. Own a business here in San Diego. LBO'd it, owner financed it. Was looking to exit pre-COVID, and then we decided to stay on to see the shift through COVID. Just basically for our employees, because we became obviously very close with them and grew the team. There's about 9 to 10 employees. Regardless, looking to transition in January 22, so in a year, trying to secure some internships prior to then.
Yep.
And looking at PE as a whole, whether it's the transaction side of the house or the business development side of the house, gotten a amazing opportunity to speak with awesome people like yourself that are on the business development side of the house. And Jordan's been a great sort of steward of that and showing us how the development side works. I personally am sort of drawn to the transaction side of the house, just from my experience with my business, because I sourced it, did the due diligence, the capital, the whole nuts and bolts of it.
That's awesome.
And I really enjoyed the strategy behind it,
Yep.
which is what initially got me interested in private equity, in general. But just trying to see, hey, since I'm not your atypical background that transaction side of the house looks for, what is typically, the realities of that? Do you think that's something that I can overcome and actually, do? Or do you think I have more potential in the, business development side of the house and still getting my foot in the door and being involved in the transactions, right?
I think your background lends to it well. I think what you need and what Mike needs, and we talked about this, is you need some intros. You need some intros to groups. It's a funny getting into private equity is just a funny, quiet thing oftentimes, and it usually comes from personal connections and who you meet, and who introduces you, and then just timing, what people are looking for. As I said, by far the most common route, and what we've done with all of our younger guys is hired them from investment bank programs. Jordan may know this. I mean, does ACG have any kind of resource with respect to this, Jordan? I mean, this would be a great thing for something like ACG to focus on.
I have not asked them. It could be interesting to do that plug, almost as like a veteran initiative.
Yeah.
But I think, if it helps add a little bit of color to this, when you look at the sponsor, the private equity universe, you have the funded sponsors that recruit associates for the investment team or people from the BD team who come from banking for the investment roles. Then you have the fundless sponsors or the independent sponsors. I'm even thinking of Colbor Capital in Chicago, where they have a very unique mission, which is to recruit people from the special operations community, the fighter pilot community, to specifically go in and help operate businesses. There are firms or like Academy Securities, which is more on like the investment banking side, where they have veterans as part of their DNA.
Yep.
So I'm trying to there's one angle in there if you come from a non-traditional background. And I forget if Colbor is funded or not at this point, but another thing I think was a good entry point is working for an independent sponsor that has done, 5 deals in the past 5 years or 6 years. Yep. And it's usually 1, maybe 2 people. And you tell that person who is senior, who is also doing the junior work, hey, let me just help you out on anything you need. And then you get that exposure for 6 months. Now you might not get paid, or you might get paid way under market.
Well, that's a great,
I think that's another
Jordan,
entry route.
We've talked about, that's a great position that, I am in my stage. Mike's, a little later on, and he's very close to transitioning. So, he's sort of been doing the same thing, but, there's amazing programs of which a lot about, Jordan, of like the DoD Skill Bridge and the CARE Coalition, where essentially tax dollars go to fund us being interns or us just getting exposure to the business. So it's literally an immediate value add of like, hey, how can we help? There's no delusions of grandeur or humility issues. I just want to help, and whatever capacity that is, just to get exposure to to a shop. So there are programs out there that lend hugely to that.
And they pay active duty salary, right, on SkillBridge?
No, you don't. You get your active duty salary, but you can't get paid by the actual firm that you're working for. So it's somewhat limiting if you have to travel for it, right? Normally, it's kind of tied to the location. Although there are some companies that are able to actually, like the bigger ones, are able to put people up in room and board, that type of stuff, which does kind of mitigate risk or financial risk. Or people are about to move to an area and they stay with their family members and like they're looking to settle down in that area. So if I wanted to move to New York, I move, I do a skill bridge, and then I stay there and I reside because the military will pay for my move, and I'll be able to collect the the
But
allowance.
it's also great right now with COVID because there's so little travel actually happening with firms that everything's so virtual.
Here's a question talking about the different opportunities, and this has emerged a couple of times, especially for access to the transaction side of the house, family offices. So I've spoken to a couple people in the recent weeks that said that family offices are becoming a little bit more aggressive when it comes to building a
Definitely.
team together and putting it. They have the actual capital where they could hire people. What is the likelihood for us for that to get our foot in the door? Is that something that's viable? Is it something that's just not? Like, what's your opinion on it?
I don't interact with the family offices all that much. They're typically buyers of our transactions. I think the better audience for that question would be the investment bankers who identify. I mean, because family offices, they're funny. You're right. They're definitely getting their act together, becoming very professional. They're bringing in more former private equity people. It used to be they were known as tire kickers. They weren't going to step up, and that is not the case. We exited a really good company a few years ago to a family office who brought in professional people, and they were very aggressive in every respect. So that's definitely becoming it's definitely a channel of buyers growing. They're going to be adding people, so I would not rule it out at all. And I think the investment banking community is the way to touch those people, because oftentimes private equity people, the family offices, oftentimes they're not they're not traveling the ACG circuit, if you will. They're just not. It's a totally different beast. And so I'm sure at some point they will, and we'll get to know, but they're like Jordan, those family offices, they're not hanging out with me and Bob Landis and Ted Kramer and Gretchen and Jay. It's a different sector.
Yeah, my take on it is that the people who I've seen at family offices in like a BD function, they tend to have come from some type of institutional fund where they can bring those best practices as opposed to a more training mindset. That's some of the interaction. Now that's my limited data set. And the other side, but on the other side of this, let's say that you do connect with somebody in the firm, your decision makers to bring you on as an intern, a fellow, an associate, or whatever, it tends to be not have to go through a more traditional process. I don't know if you'd agree with that or not, Mark.
Did you know, Jordan, do you know if there's any way, because I picture firms, whether it be family offices or private equity or whatnot, I picture firms that have principals that have a military background being the most open to this concept of helping fellow vets transition in. Is there any way of finding that out? I mean, I know a few people just because I happen to know, and I know they were in the military. Is there any way to find that?
So there's not as much data that like an organization for that I know of, but I think this is making me think about, what's actionable here. And, we were talking with a firm in the Northeast, and, they've done multiple funds, and now the founder wants to get very involved in either donating to veteran causes or get involved in helping vets get jobs in the portfolio companies. Atlas Holdings has done a great job hiring vets from that I've worked with the past 4 years. But I think the thing that my dream scenario here is where we get a small group of committed decision makers and influencers to say, we are going to have, between this group of 10 partners at different firms, we're going to commit to doing one internship, in the next couple of quarters, and then you have 10. And then what happens is that serves as a template for everyone else on how to do that potential fellowship or internship. Atlas Holdings, they have their leadership development program and they place people in the operating companies. And we've spoken to 2 of the guys who have transitioned, and they are really enjoying that. It's really, really working out well. But I think I think what I've seen in the past 4 years is that there's this big perceived risk, which is actually inaccurate. And it's just, I think the action here is finding a couple people say, listen, be an intern, do it for a month. If it doesn't work out, guys, it's no harm, no foul. Let's move on. Do it for a month or 2, and it's remote and it's no risk. And by the way, DoD pays for it by your tax dollars. Like finding, like literally just come up with a list. I would rather go so much deeper into those 10, like find a list of 10 firms who can do that. And then we message that to the industry to say, hey, here's what we did. I don't know. I don't have an answer. I've just I think it's just one of the things I've noticed. We can look at a piece of paper all the time, but the thing that's the biggest representative of what transition vets from this particular community can do, where Mac and Zach come from, is just throwing them directly into the business.
I'd like to touch on that. So from the conversations and the people that I've been meeting, there's some phenomenal programs out there in the bulge brackets. These giant firms, They have these really good programs designed specifically for veterans. But then you got to think of it this way. There's a different type of veteran. The longer you stay in, the more difficult it is to transition and the barrier to entry. But then also the skills, the longer you stay in, are more translatable to the lower middle market in these boutique shops that you have to roll up your sleeves and do a little bit more. You got the leadership and you got a lot of other intangible assets and characteristics that really play well to that field or that space. That's the space that seems the most hesitant to bring in. Veterans are kind of the diversity hire because there's very much of a pipeline, like you said. You're going to go to a bigger firm or you're going to come out of investment banking because they don't necessarily have the time or the resources to train that individual. And there's a lingering fear, whereas I want to come in, and even on the business development side, 20 years of experience, a graduate degree, an MBA, and they still view me kind of as somebody who's coming out of an undergrad with zero business experience. So how do we get past that? How do we break down that barrier? And I think the only way to do it is by placing people, building solid reputations that, hey, these veterans are actually force multipliers and doing really, really well in that environment. But then also, what are the technical skills, like on the business development side? What are the skill sets that I could train on prior to exiting the military? Like the modeling, the Wall Street prep. What else am I doing? Working on CRMs. What are the things that the hard skill sets that will lessen kind of the training that a managing partner, director, or VP is going to commit?
It's interesting. I think you get different answers from different private equity shops, but in all candor, I mean, in that role, soft skills are more important. I think you heard this, Jordan, on our Legends webinar. The soft skills are critical. And I think anybody can learn. And I don't need to do the modeling. I don't do the modeling. So that's not critical. We've got people who can do that. Basic knowledge of CRM is easy to learn, obviously, and most firms have an admin that's more focused on the details and the guts of entering information. But I think it's honestly the soft skills, and you're only going to convince people of that by getting in front of them and spending time with them, and getting to know you as a person. And I think everybody on our webinar, Jordan, would say the same thing. It really that's the critical side of it. And can you develop a relationship? Are you thoughtful? Do you care about people? I mean, I think Jordan heard that loud and clear the other day.
So what, and Mike, I think you're also sandbagging your background. Like you have clear financial modeling skills and diligence, and you have plenty of reps in the gym on deals.
That's the other problem is a lot of guys, with similar backgrounds to us, have to really get over a big hurdle that has been, by all means sort of beaten out of us since inception of our pipeline or program of like, don't toot your own horn, don't be braggadocious, and it's really hard transitioning to get over that because you're meeting people that have no clue who you are or what you know or your capabilities and how you can be a value add. And that's something that I'm having to learn in this process. I know Mike has as well, because that's just so strongly looked down upon in our community. It's like, hey, you did a great job. Cool, pat on the back. You did your job. That's what you were supposed to do. And so, having that mindset shift, not coming across like, arrogant or being braggadocious is there's a balance there, right? It's like it's knowing what you can bring to the table, looking at it from the firm's perspective on how to hedge their risk and say, hey, like I'm here to help. All you need to do is give me a thumbs up. And I'm, being a self-starter, being aggressive in understanding what you don't know and trying to fill those gaps and those voids. All these character traits that so many people and so many firms are saying, hey, like this is a requirement for private equity or for our firm. It's like we have that in spades. It's just getting them to just say okay and just cracking that door.
Zach, you and I were talking about this last night. We're like, for example, if you were to look at the BD function, we were kind of thinking through, well, wait a second. When you're sitting across the table, you can look at a founder and say, I know what it's like to own a business. Like I own my own gym. I know what it's like to go the past year and have to make payroll and have to make tough decisions. Like I know what it's like to be in your shoes.
Especially from interacting with the essentially the client, right? It's saying, hey, like Jordan, you just alluded to, like I know what it's like to take a paycheck and want to take less, so I know my employees can take more, especially when I'm already in a decently well-paying job. It's like, okay, well, how many months can I forego of any benefit from this business so my employees that is their sole livelihood can make their rent, right? And I know that immediate connection with so many, lower market, mid-market businesses would immediately resonate. Whereas not everybody, especially coming out of banking, has that ability to have that kind of conversation. So it's just getting people to understand that and see that.
Well, I think, the elephant in the room is that military experience is held in such high esteem. You guys are already way up the totem pole when you walk in the door to a business owner. I would imagine you'd be phenomenal in a management team, a management meeting session, if you will, and just automatically you have the credibility of what you've done for years. What I'll do, I'm going to reach out to the recruiter that we typically use, and just ask if they have any thoughts on how something could develop along these lines. I don't know if they do anything or not, but I think it's such a worthy cause, and it's awesome that you have taken this, under your wing, Jordan, to do this. I think there just needs to be some type of initiative to develop this channel, because you guys, I'm sure you're gonna land somewhere and you're gonna do great, but it's gonna come from shoe leather, but if there was some type of central, and like I said at ACG, if ACG could just figure out, I don't think they have to do much. If they could figure out people in investment banking and private equity with military experience, if you've got that universe, there's, I don't know how, there's probably 10,000 members of ACG. If there's 200 of those, which there's probably more, that have military experience, boom, there's a Rolodex that you guys can get your resumes in front of.
Here's another question. I'm going to flip it now based off of what you just said. And this has come up a couple times. how does our background, how do we downplay it so it doesn't become intimidating? Because a lot of us are coming in and there's like you said, there's a deep appreciation for what we do. There's also kind of a mystique about it. And for individuals that aren't necessarily secure kind of in their leadership or their management position, they might see us coming in as a threat. Whereas we don't have that intention at all. We want to come in and we want to be part of the team, regardless of where we fall in it. And we want to just be able to provide them the benefit of our experience. Right. So, but how do we best sell that to articulate, hey, we are capable, but then also the humility aspect of it, where we're not going to come in overly intense or intimidating?
You might be right. I mean, I would say from our standpoint, our shop, we just wouldn't view
You
it.
basically just say you're not as cool as you think you are, Mike.
I'm saying
You can't scare people from Tennessee anyway, so they're good.
no. I think you only do that in person. I mean, you get in front of people and they realize you're humble and you're not out to. I mean, although you could break my neck 10 ways from Sunday before I could turn around, I don't think that's what you're there to do, or assume my leadership position. I mean, maybe I'm naive. I'd like to think that's not an issue, but you do that in person.
Interesting. What's actionable here? What are some things, like, what are the takeaways from this?
Well, on my end, I'm going to reach out to our recruiter, see if they have any knowledge or ideas. I'm also going to reach out to a friend who's actually he's the global chair of ACG, and just pick his brain if there's any kind of data that they can provide that would be a resource for you guys to go to.
Really appreciate this, Mark.
Yeah, this is awesome.
It's always great talking to you.
Well, I think this is such a noble cause. I mean, Jordan, were you in the military, Jordan?
No, I read a book and then went on LinkedIn and then connected with guys who are Navy SEALs. And then 4 years later and 2,000 hours of volunteer hours, I've got, it's called.
I can't tell you, Jordan's been such a huge help and asset in just this short amount of time that I've been involved with 51 labs or 51 vets. It's humbling to see, and I don't know anybody that necessarily works as hard as Jordan does, especially at balancing all the different things he does, and still somehow keeping us front of mind and trying to push us forward. It's humbling to see. So, and guys like you, Mark, that volunteer their time to come sit in and let us pick your brain. So, and just share your experiences.
It's no big deal. I'm in awe of what you guys have accomplished in your career, and just, it's pretty neat. And I would love to be able to help. And I just don't think anybody, Jordan, has ever focused on this. I just think if they realize what a good cause and how it could benefit, whether it be the private equity group or the underlying portfolio companies. I mean, I haven't done the math, but I can't imagine how many private equity owned portfolio companies are out there in the United States.
It's also like different stages, right? Like me and Mike, Mike's sort of like trailblazing a way forward with me, even, in the short amount of time that I've been, undertaking this path. And so his insight that he's passing back to me is hugely helpful. And, I'm at the point in my kind of timeline where I'm trying to secure essentially, as many internships as I possibly can up until my transition date, just to get exposure and experience, right, and just be more of a value add. And Mike's on the tail end of that, where he's looking to be actionable, right, and trying to, not just do, necessarily the informational interviews anymore, and actually take some steps in the initiative. So it's kind of interesting to the pipeline. There's different kind of wickets along the way that people can come in and offer different resources and be different value add.
Yeah, and I would say one of the weakest thing is there's a lot of organizations, and the prep is really good that exists. There's also a lot of good organizations and a lot of people that are willing to help with the internships and that type of stuff to develop the training skills or the skills necessary. where we're lacking is kind of that finishing piece of getting people a job somewhere within the industry. It just seems that there's no real organization that's able to do that correctly. And that's kind of the placement piece where most guys kind of freak out is, okay, we've done a bunch of interviews. We understand this. We understand the processes. We've spent time re-educating ourselves in order to actually be more valuable to that industry. Now it's that placement piece that we're kind of missing.
I agree. I wish I had a go-to answer for that.
Yeah, I think what I've learned is just like understanding what I'm best at within this space. And like what I'm best at is, hey, do you know anybody at this type of firm? Cool, let me do this right now. Boom, 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 done. And I'll do that for like with Mike at 10 firms in. I think my kid just pooped all over the bed. He pooped, and now he has to go back to the shower. I got the 4-year-old jumped in naked as well. The 1-year-old pooped all over after a shower. This is fun times. But it's
Can't make it up.
Can't make it up. So that's what I realized is like what I need to be most effective at is being the connector, being the super connector, as opposed to spending all the time that goes into resume development, which I think, like let's say you want to be paired with one person and the whole thing's get really, really deep into that transition, or being the connector or whatever it is. So, well, I got to go clean up a crib over here. Guys, this is awesome.
This is great, guys. Really pleasure to talk to you again, Mike, and pleasure to talk with you for the first time, Zach. And
Great
thank
to meet
you again. And I've got a couple of action items that I'm going to follow up on and see if I can get any traction or just get some other ideas of maybe where we could go with this.
Really appreciate
Thank you very
it.
much.
Thank you so
Absolutely.
much for everything.